Audit Presentation. You're on.
Thank you for having me. My name is Ed Furman. I'm a partner with Maillie, who did the township audit. You should have received the full set of financial statements last week, the bound copies. What I did here was just put together an overall summary, like I've done in prior years, just to highlight some of the key numbers. The first page of the handout is just the agenda items I'm going to be covering. The page after that, the required communications, we issued a clean, unqualified opinion on the financial statements, which is the highest level of audit report that you can get on the financials. We also issued what's called a SAS 114 report. And that's an audit committee letter that whenever we issue an audited opinion, we also have to communicate to the highest level of the client, which would be you, the board, if we had any disputes, problems, disagreements, issues with the audit. And we have nothing to report on that report. The page after that, what I did is just summarize some of the audit work that we do. We review the internal control system. For cash and investments, if there's any account balances that are past FDIC coverage, we confirm that the bank's required to pledge federal collateral under Act 72 against those balances. We do a number of other confirmations of debt and revenue. And the bottom section, these are some of the things we think we do differently. We actually use audit software. So we download the entire general ledger for the township for the entire year. So we're actually touching 100% of the transactions. So for expenses, we run pivot tables. So each individual expense account, we layer out month by month activity. And as we get more experience with the township, we can look for any anomalies or material transactions, duplicate payments. Some of the other testing that we do, we make sure that there's a good cutoff of expenses at the end of the year. An audit step requires us to test general journal entries, so at least we have those electronically. With the employees, we look for duplicate addresses, duplicate direct bank accounts, and also matching their addresses with the vendor file to see if there's any overlap there. And we also look for gaps in check sequences, and then we follow with the checks voided, destroyed, or just not used. So again, there's a lot of electronic auditing that we do as part of the process. The last page of the handout is I put together a 5-year trend information for you to look at. And the top section there is called the government-wide financials. So that's a full accrual method of accounting. It's almost like a for-profit business where you capitalize your fixed assets, you record depreciation expense, debt's recorded as liability, and you work your way down to net assets. So looking at some of the trends there, the cash balance was pretty comparable between 16 and 17. Receivables, which are tax receivables, are up slightly. Capital assets, there really wasn't much added during the year for the township, so when you take depreciation expense on that, there was only a small increase. Accounts payable has been pretty comparable. The notes and bonds payable went up from the one note that was issued. Net OPEB liability, what that is that you provide the police with post-retirement health coverage, or at least an option to participate, and the new accounting standards require an actuary to calculate how much of that is earned with the current workforce each year instead of getting hit with a huge liability when the person retires. So that's been going up about 150,000, and it's relatively modest compared to, we do about 30 other townships, and size-wise, that's a relatively lower OPEB liability. One real positive item in the pension liability, back in 2015, that was another change in accounting where the unfunded pension liability would only be disclosed in the footnotes. Starting 2015 going forward, that unfunded liability now has to be put on the balance sheet. So you saw that for 2 years, 15 and 16, that was over $2 million. That actually dropped down to about 400,000, mainly because of the performance of the investments. You'll see in the main financial statements where the investments were running 16-17% return last year. Also, a couple other highlights with that pension liability. The police plan is 98% funded, the 9 uniforms 102% funded, and the fire is about 92% funded. So very, very strong percentages there as far as your funding of the pension. The state was looking at 70% as a distress level, so you're way, way above that number. So that leaves net assets or net equity of the township of about 35 million. So it's an overall good debt to equity ratio when you add up the liabilities and compare that to the equity of the township. The next section are the revenue and expenses. EIT had a significant increase last year. It was pretty much spread 50-50 between non-resident and resident increases there. There was an increase in the real estate taxes, and transfer tax was down a little bit, but pretty comparable to the 5-year numbers. And to be honest, most of the expense categories are pretty comparable, if not down, because of the lowering of the pension liability. So under the 404 method of accounting, there was only really a small deficit of about $154,000 last year. Now you'll see in the financials that then you also have another set of financial statements for the fund financials, which is how you keep your books, how you do your budgeting, the day-to-day. The government-wide balance sheet is just a once-a-year conversion. So the general fund balance finished the year at almost $3.2 million, and that's about 27% of general fund revenues. Bond rating agencies are looking for a safe harbor of anywhere from maybe 8 to 12. So as far as general fund strength, you're well above that. Even though there was a small deficit in 2017, that was significantly less than what you had budgeted. Some of the other footnotes to highlight, we talked about the investments in Act 72 and the pension and OPEB. And again, the budget to actual, before any transfers, you were within about 35,000 budget to actual for the year, almost right on in total. So that's a real quick summary of the 80-page document, but hopefully it gives you some idea of the trends and the financial strength of the township at the end of last year.
Any questions?
I have a few questions. Since I'm new to all this, I hope you don't mind if I ask some stupid, simple questions and get some explanations. So what is the transfer tax? Can you explain that?
When a property goes for sale, there's a transfer tax on the buyer and seller, and that's split between the school district and the township.
Okay. In the total report, you mentioned a few caveats, a few warning signs maybe. One of them has to do with the earned income tax, although it went up. You mentioned the report mentioned on page 16 that 2017 represents the first year since 2013 that the final collection of residential earned income tax was less than the previous year. And you noted that delinquent collections were abnormally high. Can you tell us how high that was and what that means?
To be honest, I wouldn't have that detail with me. I could get that for you.
Okay.
But yeah, the EIT, you can see, especially as other townships surrounding you implement the EIT, you've had decreases in that as far as non-resident goes. And that's usually mentioned each year in the management discussion that it's a potential warning site.
Okay. The other thing you mentioned on page 16 is that the commercial development remains vibrant, and you noted the Village of Newtown rehabilitation as an example, and the report claimed that this will certainly help the site increase its taxable value for the township. Can you explain how that increases the tax value to the township?
With the assessed value, I don't know what potentially that could go into. To be honest, the section that you're referring to is called the management discussion analysis. So that's really something that's done by the township staff. It's not part of the audited
I think
statements.
what was referred to there is both the earned income tax along with the real property tax, because they're adding additional buildings, that would obviously increase. Along with the earned income tax with the addition of new employees, that number will also increase.
Okay, do you know how many additional employees a development like that might?
Not off the top of my head.
Okay. I think that's about all the questions I had, thanks.
All right, thank you.
Anyone else? I have a question in regards to the non-resident EIT. And again, this is in the management discussion and analysis. I don't know if you're familiar with it or.
We review it, it's again basically put together.
Now, naturally, we have taken a hit because of Lockheed Martin being a big contributor to the non-resident EIT. And some other communities, you mentioned Middletown Township and Salem. I think there's also Unionville has instituted one. Now, the largest remaining is Lower Mayfield, who provide almost $400,000 to our non-resident EIT in 2017. My question is, if within the next year or so, Lower Mayfield were to institute their own EIT, of which we would lose 400,000.
400,000 or 500,000, yes.
What do, I mean, aside from getting additional resident EIT to offset it, what would be the solution to losing that EIT?
With that additional revenue source, they'd have to put some type of control on the expenditure side of it.
Okay.
So,
Because I
if you
said
want
that 400,000 equals pretty much 1.2 mils.
that's correct,
in real
yes.
estate tax.
Yeah, so, if the expenditures are stable or not decreasing, then that would result in a tax increase by the real estate millage.
Gotcha. So we need to have more people from New Jersey come and work in Newtown Township so we could collect.
That would certainly help.
Wouldn't that be nice?
You know, I have one township that has pharmaceuticals, people from Jersey, and they have not had a real estate tax for probably 10 years now, just because they're living off of non-resident taxes, but that's going to catch up with them at some point.
Yeah, I hear you. The debt service fund, make mention of it, says here 162,769. In comparison, how are we on our debt service fund?
To be honest, majority of our townships don't have one, so you're actually ahead that you've got some funds tucked away for that.
Okay. And I guess my final question is, what's the good news, what's the bad news?
Very good news would be the pension unfunded liability. That has dropped, and once we get all of the townships done, we'll usually put together a summary that you can see how you compare it to the others, but that would be extraordinarily low, to be honest with you. The fact that you're close to 100% funded is very positive. The general fund is well above any safe harbor numbers, so if you had a down year on EIT or something dramatic happens there, you've got some stability in the general fund to get you through that without additional borrowings.
Great. Any other questions? Okay.